Oil prices have slumped to start the week amid persistent fears that major economies are heading for another recession. The international crude benchmark Brent has recovered slightly after going down to $94 a barrel. That's around the lowest it's been since the start of the crisis in Ukraine. Natural gas prices have also fallen by more than 2% on the prospect of weaker demand from places like China. But overall, energy markets remain tight, particularly in Europe, where a record-breaking heat wave has made it harder for countries to keep their power grids powered up. In France, companies say warm weather has made water in rivers too hot to be used to cool nuclear facilities. Meanwhile, in Germany, water levels have become too low in rivers for barges to transport coal to power plants that generate electricity. Now, for more on the story, let's go to Han Tan, Chief Market Analyst at the Exinity Group in Abu Dhabi. Welcome back to the program, Han. Now, just a few months ago, we had analysts on our channel saying oil prices would reach $180. Now it's about half of that. Should we expect those astronomical forecasts to be just thrown out the window now, or where should we expect oil prices to be going?
Right. So overall, I think what is clear is that oil benchmarks are reflecting those supply-demand equations with demand fears clearly coming to the fore. Personally, I never subscribed to 180, but we still think that 130 could still be on the cards, and that's predicated on whether those demand side fears, or rather those supply risks, actually crystallize. Those supply side risks surrounding Russia in particular, especially if the proposed price caps or those full-blown import bans result in Russia fully turning off the oil taps to Europe, right? So, and then if you look at OPEC Plus, with them either being unwilling or unable to ramp up supplies, I think that energy crunch, again, if it materializes, is likely to send oil prices soaring once more.
Right, so another major commodity that Russia exports is natural gas, and we know they've reduced shipments to Europe significantly over the past few weeks. So with Europe struggling now to fill up its natural gas storage facilities, when winter comes, which is when they need it the most, what happens on the continent?
Right. In short, an energy crunch or a greater energy crunch would ramp up the recession risks for the Eurozone. Now, we already know that policymakers in the EU had been bracing for such a possibility in recent months, and this energy crunch would then place a cap on how much economic activity can be generated. So those fears are not new, and they are already evident with the euro failing to materially lift itself off that parity line with the US dollar. And again, that also assumes that the Eurozone isn't already in a recession even as we speak.
All right. Han Tan, Chief Market Analyst at the Exinity Group in Abu Dhabi. Thank you for joining the program.